So people are losing $40,000 buying their first home and they don't even know how it's happening. I'm about to show you 6 traps with FHSA. If you are making even one of these, you need to know right now. First trap, you are 24, you want to buy a home at 30. You think I will start saving them when I'm actually ready to buy. Sounds logical, right? Here's what actually happened. Path 1. You start now at age 24, put it in $400 a month. By the age 30, you will have $28,800 in contribution and that will grow to about $50,000 approximately. Path 2. You wait until 28, same $400 a month. By the age 30, you only have around $10,500. That's a $39,500 difference. You didn't lose it to a bad investing. You lose it by waiting. The FHSA has a compound growth working for you. Plus, there is a 15-year timer that starts the moment you open it. We will come back to that timer in a trap 3. The trap number 1, waiting too long to open it. Second trap, you open your FHSA, money starts going in and then it just sits there in a cash. You think I'm saving for a down payment, so I need to keep it safe. Let me show you what that costs. $8,000 per year for 5 years is a saving account earning 2%. You end up with about $42,000. Same contribution, same 5 years, but in a basic index ETF averaging 7% returns, you will get $47,000. That's $5,000 extra just for investing instead of keeping it in a cash. All tax-free growth. That's trap number 2, leaving your money in a cash instead of investing it. And wait until you hear trap 5. Most people don't even know you can do what I'm about to show you. Trap 3. The one with the timer. Remember that 15 years countdown? Here's what happens when it turns out. You open your FHSA at 25, put money in for few years. Life gets busy, career, relationships, moving, you forget about it. 15 years passes, the account closes automatically and your money gets transferred to your RRSP. Now if you want to use it for a house, you have to pay full income tax on withdrawals. At 30% tax bracket on $24,000, that is about $7,200 gone. That's trap number 3, forgetting about their 15-year deadline. But honestly, the next one is even more frustrating because it locks your money up to and you cannot use it for anything. We are halfway through. Hit like right now. Fourth trap, you save $16,000 in your FHSA over 2 years. You find a great rental property, perfect investment. You go to withdraw your FHSA money for the down payment. Application rejected. The FHSA only works for the first primary residence in Canada, not rental property, not a cottage, not an investment property, the home where you actually live. Your $60,000 is stuck in your account. Can't use it for rental. And once you buy the rental, you are no longer a first-time home buyer. So you can never use your FHSA. And there is another qualification rule. If you owned a home anytime in last 4 years, you don't qualify for FHSA either. Sold your house 3 years ago, can't use it. You need to wait until full 4 years from your last home ownership. That's the trap 4, using it for wrong type of property or not qualifying as a first-time home buyer. But the trap 5 is where the most people loses the biggest amount of money. So fifth trap, almost nobody knows this. You maxed out your FHSA at $40,000. Time to buy first home. You need a bigger down payment though. Here's what most people miss. You can use your FHSA and RRSP home buyers plan at the same time. Most people think it's one or other. It's not. FHSA gives you $40,000 tax free, never pay it back. RRSP home buyers plan give you $35,000 also tax free at withdrawal. You just have to repay it to your RRSP over 15 years with no interest. Stack them together up to $75,000 total for your down payment. People are leaving $35,000 on the table because they don't know you can use both. That's the trap number 5, not knowing you can stack both accounts. Now there is one last trap and it's costing almost $1,000 per year in plenties. Last trap, you get work bonus. You contributed $8,000 to your FHSA. Great, you maxed out your year. You put it another $8,000. 2 months later, the letter from the CRA, you are getting charged a 1% penalty every month on that $8,000 over contribution. That's $80 per month and almost $1,000 per year in penalties. For money that's supposed to help you buy a home, the annual limit is $8,000 per year and the lifetime limit is $40,000. And there is what's confusing. Unlike TFSA, your unused contribution room doesn't fully carry forward. If you contribute the full $8,000 this year, you can only carry forward up to $8,000 to next year, not the full unused amount from previous years. That's the trap number 6, over contributing to your FHSA. Alright, 6 traps. Now here how to avoid every single one. Trap 1, waiting for too long to open it. You lose up to $39,500 in growth. Solution, open your FHSA now even if you are not buying for years. Let compound growth works. Trap 2, keeping it in a cash. You lose around $5,000 compared to investing. Solution, if you're buying in 3 to 5 years, invest in a index ETFs. Keep it cash only if buying within a year. Trap 3, forgetting that 15-year deadline. You have to pay $7,000 in taxes. Solution, just remember at year 14 either use it for a home or move it to TFSA or RRSP yourself before it is forced. Trap 4, wrong property type, not qualifying. Your money gets stuck forever. Solution, only use FHSA for first primary home residence in Canada and make sure you haven't owned a home in the last 4 years. Trap 5, not stacking accounts. You leave $35,000 on the table. Solution, use FHSA and RRSP home buyers plan together. That's up to $75,000 total for your down payment. Trap 6, over contributing. You pay almost $1,000 in a year in penalties. Solution, track your contributions yourself. Don't trust the CRA website. It's delayed by weeks or months. Follow these solutions. You can keep all your $40,000 tax free for your first home. Quick disclaimer before we finish. I'm not a financial advisor. This is education only, not financial advice. Now here's my questions. Which trap were you closest to falling into? Comment below. I actually read every single one. And if you are ready to open your FHSA, I have linked Wealthsimple and Questrade in description. It takes about 10 minutes to set up. If you use my link, you will get sign up bonuses. If this video helps you, there are more content coming that you will probably want to see. Hit subscribe so you don't miss it. And if you know someone saving for their first home, share this with them. It might save them thousands. Thanks for watching.